Hello, everyone. Can you guys hear me okay? Sorry for the Zoom issue. The regular Zoom room wasn't working today, so we needed to scramble and get you guys another link. Lance and Jeff will be joining us very, very soon. Lance is actually in the house today. We're going to be doing this together. I will be back in just 1 second. Echo. Can you check the sound, please? Let me just make sure everything is good here. Yeah, just come sit next to me. And you may just want to make an adjustment to the camera here now, and we're all good.
They have,
Yeah. Hey, Dr. Bob, how are you? Rick, how are you? And there's Lance. That's right, we're all here. How are you guys? How are you doing? Look at that. Ray says wiretap paid for itself and burn notice the first week.
Nice.
Beautiful. Love it. Leslie, good morning to you. How's everyone doing? Jeff will be joining us in just a few minutes.
I think Jeff was taking over my room today. He just messaged me.
Is he going to be here today? What time is your room usually closed?
He might have usually 11. Let me message him actually.
Yeah. Good. Oh, look at that. My two favorite morning gurus. Perfect, Robert.
Do you have a hot date, Roger?
I made a promise. I made a promise to Jeff and Lance.
I do have my sport coat.
That's okay.
What's up, yo?
Hey, there you are.
There he is.
We were just waiting for you to get started. Yeah, it seems like Zoom had some issues with passwords today. Like nobody's password was able to work on Zoom Room. I don't know if you guys had the same problems, but
Oh, that's wild.
yeah, it's like nothing was working, you know? How are you doing, Jeff?
Excellent. How are you?
Good. How's the weather in sunny South Florida?
It's excellent. It's actually a little bit squally, but I like that.
Squally?
Squally, like a little
That
bit of
sounds
rain.
great.
Yeah.
I'm jealous, man. I can't wait. I'm hearing it's supposed to get warm here. I'm holding my breath. So, and as you can see, Lance is here. We're all here, folks. We'll just give the room another minute to start. Just to, says Tom says, have you calmed down yet? What happened, Jeff?
Did you go? What stocks were you talking about? Because yesterday in the room we did the trade desk and Robolics. I was flipping coins, buying bear put spreads, and both are pretty down pretty hard today. But Jeff, did you expose some of these bad stocks in the trade room? And when I say bad stocks, I mean in a good way.
What happened?
What happened? I don't
What
know.
happened?
I don't know. There was an internet tough guy. They're out there. I usually just like don't I usually just don't pay any mind to them. But this time I had to respond because I was insulted in a way that I do not accept. But yes, I'm calm. I'm calm at this point. What stocks did we talk about? We talked about Schlumberger, super bullish, mega bullish still. We talked about what else? The Mormon guys are the worst. That's funny. What else do we talk about? Oh, we talked about Micron. I'm a little frazzled. I think
It's
I dropped an
okay.
F-bomb or two. It's okay. Whatever.
Did-
PXD, Pioneer, big fan of that stock.
Did you Dave Portnoy them?
I Portnoyed him a little bit. I think I might have said something like, you guys are here to watch me, not for me to watch you, or something to that effect. I don't know.
Well, just don't have your stock drop 50% like Penn did now.
Yeah.
I'm down a lot of money in it.
Yeah, we're not in the mood for disharmony. So let's get started. It's 11:30. It's right on the dime. Yeah, our PXD is a great natural gas right now. It's definitely a stock that you guys want to get into and play. And again, the room is a little light today because we had a mishap on the link, but I'm sure we'll pick it up on the replays. But let's see, who should I start off with? I'll start with Lance today since Jeff is a little frazzled. So Lance, I know the market's been in a kind of the choppy going
Mess.
hurrying up to go nowhere fast kind of a situation. How long do you think we're going to end up being in this environment, and what do you think is going to be the catalyst to get us out of this environment, one way or the other, to the upside or downside?
Oh man, that's a good question. I mean,
I look at the growth stocks and the growth stocks and big tech. So the growth stocks remain really bad. Big tech is still holding okay. Your FANG stocks, right? Your Facebook, Apple, Microsoft. They haven't broke yet. So I'm watching them, basically your XLK names. If they can rally and bounce, and remember we heard like from years ago, you hear, well, there's only FANG holding up the market. If it wasn't for Apple, Facebook, Amazon, Google, the market wouldn't be up. They're accounting for X amount of the S&P. I mean, if they start rallying again, I think we could see a huge breakout. Now, if they start to break down, then we have problems. And I think you can actually look, if we start seeing some growth stocks stabilize, and I'm not saying like we have to have like a complete rally out of nowhere, but just some consolidation, and then we have that energy build up and eventually a move to the upside. And once we get out of this earnings season and stuff, a lot of it's just noise right now.
A lot of it is just noise right now, and I happen to agree with you. I think there's a really good chance we could have another rally. Also, and this, I want to get a response from Jeff on this. One of my biggest takeaways, and if you look at the broad view, we still have a conflict between Russia and Ukraine, and there is a threat of rates going up substantially, and the Dow Jones is about 2,000 points away from all-time highs. I'm just saying, so my thought of that is, remember, everything we know is already priced into the market. I want to ask Jeff what he thinks about this. What do you think about what we've been saying, Jeff?
I think we're in a bear market. I think the S&P is going to be down 20% at some point in 2022. What's it down now? 6%. So we have another 14% of downside before we bounce. I think the volatility is going to be something that stays north of 20 for the first 6 months of this year until we get into the hiking cycle. I think that a lot of stocks are still broken technically, and you get violent bear market bounces, but then there's this overhang of inventory pushing them right back. You get these days in stocks like BABA, PDD, these Chinese names, the Rivians of the world, where they look like the coast is clear, and then off with their head the next day. And I just, we need more of a climactic. People need to fully quit. People need to fully quit, getting hammered, and then the market can bounce. Right now, people are still getting hammered every time they stick their head out like that gopher hole. And until that stops, then I think we're still going to have some violence on, some violent tape, whippy action.
Nice. Well, let me ask you this. I'll go back to Lance, and we'll work our way to Jeff, and then we'll go backwards. What are you seeing as some key sectors outside of technology and consumer discretionary that are looking good?
Well, I guess I'll talk my book. Some of the retail names, like I bought Macy's calls earlier today. They have earnings upcoming. I think a lot of these stocks got beat down pretty hard. Crocs is down today. Macy's, Under Armour sold off pretty hard on earnings. Thankfully, close out most of those. I think they've been just a dog recently. So when nobody likes, like right now, I feel like nobody likes retail. That's usually when I start liking them. I do feel like the XME names, metals, minings, the steel names, stuff like that. I feel like I missed some of the pops on them recently. Some of the commodity names like Alcoa, Freeport with inflation. I just feel like I kind of missed the boat on them. I think they go higher from here. It's just from a trade perspective, like, hey, what can I do right now? I think retail offers a decent risk versus reward, and also too, they're kind of honey badgers from the market. Like, let's say the S&P goes down like 1 or 2%, you could still have some of the retailers with individual news, or they could move kind of on their own, and they're not too correlated compared to, like, let's say you go buy AMD calls and the NASDAQ drops and semis drop, you're pretty much stuck because the overall NASDAQ and chips are down.
Right.
You know what I mean? So you always want to have outs in trading, I feel like. And, if you don't want to say, like me, I don't know if we break out or break down from here, if we trade sideways, I'd rather be in individual stocks than having to be like, oh man, the S&P's down 50 points today. Like I'm gonna get crushed.
Yeah.
You know what I'm that's something. And I know you follow consumer discretionary a lot, and the energy names and kind of the energy names have been something that has been just, well, energy stocks don't care what the overall market's doing because they're more news related.
Yeah.
And we've seen that recently, especially over the past few days.
Jeff, what sectors specifically, what sectors are you targeting right now in light of what's going on to the upside and or to the downside?
Upside, still have to be bullish on energy. Oil is not retreating one bit. It's one day down, it's the next day up, the next day after that up. So it's one step back, three steps up. That's the sign of a bullish tape. I think you have to be long commodity stocks still. Like we have FCX is one of the best performers in our monthly money flow elite. I like that space. I like copper. I like anything hard asset related. Inflation is still going to go. Banks, I'm still bullish on. I'm not as bullish on retail, and I'll tell you why.
Don't
You
be
had
a
a
hater,
three,
Jeff.
huh?
Don't be a hater.
I'm not going to be a hater, but I'm going to have a reason for it. We got a 3.8% print this morning on retail sales. Market went straight into the shit tank. I'm looking at these names are getting smoked. We have inflation. We have a hard time. These companies are having a hard time making profits. They're having sales. They're not making profits. And profits are the lifeblood of businesses. And so until they get inflation under control, you're going to have not so strong retail sales come out, and the profitability will still be bad. So if they can't make money when the getting's good, what are they going to do when we go into a recession?
Well, so my argument in the retail space is, well, travel names are hot right now, right? Look at airliners.
Yep. That's
Travel
reopen
names are
though.
hot.
That's not retail though. That's travel's a different thing.
But people are going to go to malls. People are going to shop to travel. They're going to buy new clothes. They're going to go to Macy's. They're going to go to Abercrombie and Fitch. They're going to go on a cruise and buy their Skechers shoes. That's my argument for the bullish side. Now, I'm not saying like, the retail sector in general, but I think specific names in retail.
For sure, yeah. There are good stocks in there, no question.
Right. That's what you want, because you are going to have people. I mean, look, someone mentioned in the chat, and make sure you leave a chat or a comment if you're on YouTube. Leave a comment, hit the like button. Really helps with the YouTube algorithm. People said Airbnb. You had Marriott report earnings. When you go travel and you're going out, let's say a business meeting, you're going to go out on vacation, you're going to go spend money. You're going to go get the new dress shirt. You're going to go get your new shoes and stuff like that. So the people too.
But where people get money? Where are people getting money from? They got money from stimmy checks. They got money from refinancing their houses. Have you looked at what mortgage rates are doing right now? They've gone up 100 basis points in 4 weeks. So
They sure
the
did.
house ATM just got shut back. The Uncle Sam Biden money is nowhere to be seen. Child credit checks that people were getting stopped. So I don't know.
Returns.
Mhm.
Tax returns upcoming.
Yep.
Yeah, that's true. But I'm just
Tax
saying,
return.
you have less people paying the rent this month. This is a stat that's going to rip your guys' heads off. You have 8% of America that's renting is delinquent in their rent, which was higher than when the pandemic first came out.
No, you're absolutely right.
I just think we're going into a recession. That's the thing. I think we're going into a recession.
The whole rent and housing, that's a whole nother argument of how expensive things have gotten. But
that eats at that extra money. That eats at that extra money is what I'm saying.
But we have people in the chat saying, what about credit?
Yeah.
That's a good point.
Yeah,
we're going back to living off credit.
Yeah, people are going to, which is why I'm bullish on credit card companies right now.
I'm bullish with you. I'm with you though. I'm bullish on travel. I'm bullish on experiences. People going to, Marriott, people going on vacations, people flying. There's a big, pandemic's done for a lot of people. Maybe not in Canada, but in a lot of places, right?
And let me ask you, but let me ask you guys a very interesting question. And this is the pink elephant in the room that nobody seems to want to talk about. Let's say the Fed begins their journey on increasing rates and starts, thinking that they're really smart. And let's say the market just tanks like there's no tomorrow. How
Mm.
fast do you think it'll be before Powell and his cronies change their tune and start talking about AIDS and pulling back and all that other good stuff? Probably, if I had to guess, 72 hours.
Yeah, I was about
Would
to
you
say.
Yeah,
would
but
you
the-
agree? Like
Yeah,
this?
but it's not that they haven't even done anything yet. And look at what's happening. They haven't even like think
Right,
about it
yeah.
like that. So what are they going to do? Say that they're not doing what they didn't do anyways? It's like the market has been addicted to them buying bonds. The whole game has been they've been adding liquidity into the system, and they're stopping doing that anyways for at least a little bit of time. I think they're going to come back to it. I don't think the recession is going to be super severe, but I think we're going to have a recession, no ifs, ands, or buts about it this year. You're already seeing signs of it.
I don't think we're there yet. I think I think we may be heading into one, but I'm not as bearish as you on the overall market. I'm still thinking
You are.
that.
You are.
Yeah.
Yeah.
I think too when we get more into political season, I think that's going to be a complete how to use a proper word without saying shit show. A circus.
A circus, yeah.
A circus, and I think that is going to be not only are you going to see inflation ads and everything, but depending on what happens to the market, if that's when you start seeing a dip in the market and people are really feeling it, then it is just going to be a complete disaster, I think. So,
But this is the thing. I think it's going to be a tradable event. I don't think like it's going to be like, great recession. I think it's going to be a garden variety recession. I think we're going to be in a 6 to 12 month bear market. I think we kind of come out of it hot. Basically, because of what you guys were saying, they're going to go back in there and they're going to say, all right, we got to go buy bonds again. So what they're going to do at first is let the bonds run off, right?
Mhm.
That's what, Bullard was saying anyways. They're going to let the bonds run off. So the short duration bonds that they have on their sheet, what they've been doing is replacing them as they run off and buying new ones. They'll go back to that sometime in fourth quarter after everything goes wild, or right before the election. Probably like October, get that juice going. I think it's going to be a long into the year end, the market in general, but violence before that, sheer violence.
Any specific defensive assets, sectors, anything that you're looking at outside of volatility? I know you're really big on short-term volatility, and that makes perfect sense because volatility is going to go ape shit. Excuse my French.
I like it. I encourage that.
When markets come down.
hit the like button for that.
Yeah, but seriously, is there anything else? Are you looking at consumer staples? Are you looking at financials? Are you looking at utilities? Anything else that you're looking at?
I like, defense contractors are going to make a lot of money this year. There's going to be some sort of, it's not going to be like an all out war. It's not, it's going to be a very surgical procedure. It's going to be, I'm taking this, I want this port, I want this, and I want that. And the Americans and NATO, they're going to say, oh, we're going to put a 50%, VAT tax on anything coming out of Russia. And there's going to be an embargo on all these goods. And then Germany and France are going to say, wait, we need their gas. So like, no, maybe that we don't do that. And so, but in the meantime, people are going to be sitting at Congress, banging the drum of war and saying, we need more money at Raytheon. We need more money at Lockheed Martin. We have old this, we have old that, we have old Apaches. We need new ones. So I think defense stocks are gonna be a good sector for the remainder of the year. Personally,
yeah, I think you're right on the dot.
And they tend to be kind of defensive, right?
Yeah, and they are very defensive. I mean, America is still going to be spending quite a lot of money on defense, and I don't care where we're at in the economy. So that is definitely going to be a very, very strong point. Are you looking at any, Lance, are you looking at any commodity type of stocks outside of oil?
Yeah, actually, when we had something in the chat about metals, look at Barrick Gold, or now I think they're, Rand Gold? GOLD today, nice pop on earnings, up about 7% or so. I mean, if you look at spot gold too, we really held that 1800 and possible breakout 1900 upcoming. I know a lot of guys talk about gold when it's up, and then when it does nothing, they don't give a darn about it. But I mean, it's starting to get there, and the whole inflation hedge and everything like that. I mean, it's starting to move. Obviously, copper. You go look at Freeport or Teck or Southern Copper Company. SCCO. Those names have been really, really strong there. Uranium names, I don't really like right now, but we see some in the chat. But the metals have the star bulk carriers. The metals are. I don't want to jinx it because usually every time people talk about metals, they go down. But they're kind of slow, steady moving up with the market being pretty choppy recently.
Right.
So
right.
it's something to hide in at least. You can't hide in much anymore. Because there's really, everything's been pretty correlated. Like, you can't move to utilities. Utilities are breaking down.
They're breaking down right now. Yeah.
So
yeah, which is kind of odd because utilities typically rise in this type of a market economy, which is one of the reasons I'm personally, the way I'm looking, and I'll give you guys my take. I've been kind of quiet, just kind of sitting, listening to Jeff and Lance, but I'll tell you guys my feeling. I do think the market's getting worse, and I do think we're going to go into a nasty, nasty market, but I don't think we're there yet. Also, earnings were a lot better than expected, and I think that's going to pull. And the top 5 stocks had earnings that were about 22 to 25% better. Not the FANG stocks, but the Amazon, the Alphabet, the Facebook, the Google, but not the Netflix or the Nvidia.
I didn't even see that. Did you see Shop today?
No, I did not.
18%
Up or down?
down.
Down. Yeah.
Shop's cutting.
Yeah.
Shop's more than
Retail.
Wow.
So retail sales data is good, and I think the market is struggling right now. But I think the market's looking for direction, and I'm quite impressed and surprised that the market's actually holding near the 200-day moving average in light of all of this data, including the Russia. If you guys remember a few years ago when Britain and when England and the rest of Europe separated, we had like the biggest volatility in the world. That for like a few days. So I think the market's actually handling itself really, really well. And my theory is, if we're holding on so well now, what would happen if actually things got a little better?
Right. Eased up.
Yeah, eased up a little bit. So, like yesterday, we had just one slight indication that Putin is easing things off, and the Dow goes up 400 points or 500 points. And also, another factor that's telling me we're still in a bullish market is the volatility we're seeing. Typically, when markets really crap out, and I'm not talking about a shakeout, I'm talking about a bearish market. You start seeing very low volatility, a lot less volume. You start seeing the stocks opening higher, going lower, which we have seen. But typically, you see a lot less volatility. The fact that we're still seeing 400, 500 point up days is a sign to me that there's still a lot of fight between the bulls and the bears. So I am not as bearish. I'm actually kind of mixed to still a little bullish. I'm still giving the bulls a little more room to go up. And also, historically speaking, if you look at 2008, when the Fed started pumping money into the market, they completely ruined the rhythm of the market, and they distort the 4-year market cycle, which I believe has happened quite a lot. So I am getting defensive, and I do believe we're going to see some volatility, but based on momentum levels, based on the current PE ratio, based on how the market is reacting, I still believe the bulls have at least another 2 quarters left. That's my 5 cents. And everybody's entitled to their own opinion. And again, that's what I believe.
That's the hardest thing, though, is when. You know what I mean?
Well, yeah, of course.
Because timing is so important that, we see some questions here. Like Roger John says, when would you need to go bearish?
I think we would need to go bearish when most of the stocks like Apple, Amazon, the large cap stocks gave up the ghost. Yeah. And I'm not seeing them. I'm seeing them fighting for their life to stay bullish.
Right.
And typically when you see Apple, Nvidia, those type of stocks, really, I mean, I was looking at the Dow Jones. I came in this morning and I was looking at the Dow, and I was just making an observation. I was telling Tom Busby, T-Buzz, I said, the Fed is talking about 7 rate hikes. We're in the middle of a potential war today. Today's supposed to be that official day, and we're only 2,000 points away from all-time highs. Right. That's not really that bad. And also, I look at long-term and medium-term momentum levels right now look like they're at a real low level. And also, folks, interest rates are not at 15; they're at 3 or 4, and we're not going to go to 15 or 12. So I think when you look at and also like retail sales today, the numbers beat expectations by a good percentage. So what I think we're seeing is a lot of distortion, a lot of fragmentation, a lot of uncertainty in the market, but I'm not really seeing a classic bear market or symptoms of a classic bear market right now. That's again, that's my 5 cents. And if everybody thought the same thing, then the market would just kind of just sit like this and not move.
Problem
anywhere.
is, when you see it, it's going to be too late. It's going to be already it happens in like, lickety split. Like, oh wow, now I'm bearish. That's when you're supposed to be bullish in a bear market. You're supposed to fade moves in this type of tape. That's what I actually have the reverse opinion. The volatility, the whipsawiness, that's the hallmark of an unsteady market. That's the hallmark of a bear market. In a bullish market, you have almost single digit. You have moves that are like 15 basis points on the index. You get a stock moves 1%. It's a huge move. We're seeing every stock move 2-3%. We're seeing earnings move 25%. The worst, the biggest moves are on the downside when stocks.
yeah.
Look at Viacom. Look at Roblox. Look what happened to Facebook.
PayPal.
These are not bull market moves. When these things are happening, it's a pain trade. These are hedge funds that are getting liquidated. I've been at those funds where those phone calls happen, and they're not fun because you're not selling because you want to, or because you have a view, or because you're happy, or you're sad, or whatever. You're selling because a guy tells you, "I need you to get the fuck out of this stock by 11 o'clock."
Oh yeah. Yeah, we've been there. I've been there many times.
I think too, and people in the chat can probably comment on it. I mean, there's certain tickers out there that from a month ago to a year ago that people feel like there's no hope, and these stocks are in a bear market. I mean, I'm down so much money in DraftKings and Penn. I don't have any hope that they'll come back. I see DraftKings go up maybe 5-7% a day or two, and then a week later, it gave back all the gains.
Oh yeah, that speculative stuff is done.
And I'm stuck.
Yeah.
So but there's it's like a tale of two tapes, right? Like there is like the healthy Microsoft and Apple that print money. Roger, you're not wrong. These guys are printing money, right? And but then there's everybody else, and then
and that's what I think. A lot of people who own stocks or got into stocks recently, they went into these high flyers. And now they're thinking, well, I bought Robolics at $120 because they were talking about it every day on CNBC. Now it's at, 50 a share, 55 a share. What do I do? And that's like, to a lot of people who trade individual stocks, they're thinking like, what happens if does happen if the Qs or S&P goes down 10, 20% from here? Like those stocks are going to be basically, sub $10, $20 or so.
Oh, absolutely.
That's a bear market in itself.
The Fed is clearly comfortable with what we're at in the market. They're comfortable with that. They're pressing on with where we're at in the market. So I think the Fed is a hostage to the market, and they will not react until things get much worse, is what I'm trying to say. The market will not bail out the Fed.
Yeah, the market's not going to bail out the Fed.
The market's not going to give the Fed the opportunity to say, we did our thing, and it worked, and everything's fine. That's not how it's going to work, because they're already behind the curve.
Oh, they're way behind the curve. They're way behind the curve.
Who said it today? Was it Bullard, or said 2 days ago? He goes, the Fed is trying to keep their credibility, blah, blah, blah.
Yeah. Like what credibility?
What? Yeah, exactly.
What credibility?
But like that's how bad it is right now, and the way of thinking.
Guys, 7.5% inflation is not normal. And they're totally cooking the book on the cost of living, on the rent, which they say is 3% increase, when every outside person is saying it's 15 to 20% rent increase year over year, and they have 3% baked into their 7.5% CPI. This inflation thing is so beyond the pale. And for them to sit here and like they've been saying it's transitory. So we had a guy that was trying to tell me that it's transitory when Biden won, like a year ago. And he's like, don't worry, it's going to calm down. What do you mean, don't worry? That's like you have a portfolio that's on fire and you say, don't worry, the portfolio is on fire, it's going to come back. What do you mean, don't worry? You have to worry.
Jeff, you're absolutely right, and a lot of stocks are showing that type of movement. So there's no question about that. Now, folks, wasn't this a great session? And again, we didn't talk about this before. We kind of just wanted you to get in our heads, and it's interesting to get everybody's perspective because it seems like if you look at all three of us, it seems like I'm the most bullish one. Lance is in between, and Jeff is the
Like the bear.
Yeah, well, I mean, wouldn't it be kind of stupid if we all said the same thing and we all
It's
agreed
kind
on
of
everything?
working though.
Maybe,
I mean, it's
opposite
kind of
of,
working right
Stacey.
now, right?
Yeah,
I mean, it's working for all.
Of course. Listen, man. Look. In all defense, I could point out to just as many bearish stocks as I can to bullish stocks. And by the way, the last 3 trades I put on till today were all bears. So I should be the last. So I should be the last guy. I should be the last guy to talk. I'm not disagreeing with you. And there's a lot of opportunities to the short side, including New York Times, what I can't wait to get into. I've been talking about that one for a week now. Folks, before we say goodbye, and obviously you can email each and every one of us, and you can get feedback from all of us. For example, Jeff's email is Joy of the Trade. My email is support@MarketGeeks.
Support at New Money Crew.
Support@New Money Crew. Just gave him a brand new email address. .com.
Yeah.
There we go.
Or just comment on YouTube or in the chat, and we'll hook you up with the all the communication you need because we're working on it right now.
Exactly. We're literally working on right now getting him that email set up.
Yeah.
So if you want to email him something now, just email me and I'll forward it to him.
Yeah.
Now, folks, before we say goodbye, does everyone want to see something brand new that I've been working on? Of course you do. It's something I've called the 5G Investor Guide. Think of it, your complete guide to the 5G future, because if you haven't noticed, 5G future, well, it's arrived. And if you don't know how to navigate this tech era, you could be in some hot water. Luckily, inside this report, I've included my number one hot 5G stock for 2022. And I think 5G is going to pick up. And these are small stocks. They don't have a lot of correlation to the overall market. Now, I believe this one, after often disregarded company that I'm about to share with you, is critical to the development and the rollout of 5G. If you guys are in my VIP program, you've heard me talk about this several times. I think this could literally stand to gain billions worth of revenue as 5G takes over. So, there's no telling how high this can go. And today I want to give you this pick and a brand new report to all our roundtable attendees, 100% free, as a special bonus for joining my flagship service, Overdrive Profits. I know a lot of you guys are already in this program. It's been on a very hot streak. Baker Hughes, 50% in 5 days. Target, 32% in 9 days. 56% in 5 days. I think we've been running at about a 78% win rate on that program in the last 4 months. Let me show you how it works. It'll just take a few seconds. We get a volume spike. Very, very important. It has to fit a certain criteria. We close above the 50-day moving average. We retest the 50-day moving average on the way down. We enter the trade, set a profit target. And then we know exactly where it is based on the movement of the stock ahead of time. And these setups happen every single week. Most recent closed trades. Look at these recently closed trades. Not bad.
Wow.
And by the way, that's the since October. That's since October.
You got calls and puts in there.
Yeah, don't think I've been like super bullish. I've been very neutral lately. So Jeff is not wrong at all in anything he's saying. It's just interesting how we have this degree, which I think is cool. Now, as some of you know, my option trading programs sell for $9.97 or more most of the time. But today I'm going to do something crazy, different. Overdrive Profits, a monthly membership, $7.
What?
$7. No joke. That's right. Go to rogerscott.com/ODP or click the link in the chat. And yes, these are actually all of our last. I'm going the other way. And
This is the only recession-free product. $7.
Right.
And you get how many trades? You said.
Well, I've been cheating it. I've been promising one a month. I've been doing like 4, 5, 6 a month. What can I say? I've been over and delivering. But these are actually all the closed trades, all the recent closed trades we've taken in since October. I don't know. It's been quite a while. We've been on a roll. Let's just say that. So again, I'm going to do this different. $7, no joke. Go to rogerscott.com/ODP or click the link in the chat. There's more. There's always more. When you can join today, you can expect at least 1-2 trades a month, and I've been doing a lot more. We won't tell anyone, all right? Let's not tell my publisher because he'll spank me for that. You always get the email. You always get the alert. You get the members portal. You get the trade tracker. You get my 5G investor guide report. And if you already have it, upgrade now. You'll get an extra year. I'm going to change my mind and upgrade the price on this thing because the performance has been just stellar. We've got 30 video tutorials,
Nice.
over 12 hours of content. You know I always over-deliver. My favorite technical strategies, our US-based customer support line. It's a complete program. I promise you it's worth more than $7. You're getting this at book value, right, Jeff? Book value.
Book value.
Bro, I don't know how
Low
you can
PE
turn a
rate.
profit with that.
Low
Low
PE
PE.
ratio. Yeah, folks, seriously, it's a no-brainer. If you haven't done this yet, do it. Make today even better. I have a special bonus for everyone here at Roundtable. Everyone who joins Overdrive Profits is going to receive my Stock Fetcher code. So you don't have to look for these things yourself. That way you won't just receive alerts. You'll be able to locate trades on your own. Get this. It's money back guarantee, personal guarantee, no monkey business today. I don't have my sound machine on just yet. That'll come in later. It's too early for that. $7, the best deal. Do it now. We got to log off. Folks, this was a great session. We're going to record this, put this on the website. But I love how we disagree sometimes because it's good to get the dynamic in there.
Yeah. So if you're watching on YouTube, make sure you like the video, subscribe, leave a comment on what stock or stocks you want us to talk about next week, and whether you're bullish or bearish on them. And maybe we'll have Jeff take you one-on-one, and he'll get the combo, the wrestling match like Hogan, like Flair, and he'll say if your stock's gonna go up or down, or if it's nothing but a piece.
I'm usually pretty wishy-washy though. I might just not have an opinion that day. But I would say if you're watching this on, I'm kidding. If you're watching this on YouTube, don't watch it live. Come watch it live. Our ideas are like cooked fresh, like baked hot. You know, eat them now. Like, you know,
That's right. Because
the
next week,
neon sign for the Krispy Kremes, eat those things hot. Get it hot. Get this.
that's the
stock
best
talk
time to go
hot.
through the
Watch it
drive-thru.
live.
That's right.
It's cool to
All right.
rewatch it, but
All
watch it
right,
live.
folks, we got to get going. We Mark K and I are going live in about 27 minutes, so I got to eat my lunch before we go live. Thanks again, folks. If you want to reach out to Jeff, it's jeff@joyofthetrade.com, support@newmoneycrew.com.
yeah.
Give him half an hour. It'll be
yeah.
active. He's only been here for 3 days. You know, he's a new guy, so we have to give him a new address.
And to check out Roger's report, it's rogerscott.com/ODP.
It's for Overdrive Profits.
And
yeah,
it's $7.
ODP. It's $7.
It's $7.
And we've had like an 80%.
What
I don't even.
I like, Roger, is you have 30 plus videos in there.
Yeah, 12 hours of videos. Great stuff.
That stuff alone, you know, even if you're new to options or you're like, hey, I need to understand this, at least you could watch that on demand in the members area, and you don't have to go through all the ads and all the BS searching on YouTube or whatever. So it's real simple. That stuff, you know, nowadays we could screen share and give you that stuff. So even for $7, I mean, as you get those videos, they're very, very helpful. Stuff like that's just really important, the basics of trading. So, you know, be sure to check it out.
Bye, guys. Thanks, everyone. Bye, guys. Thanks, Jeff. We'll see you. Bye, guys.
Yeah, that education stuff for